Why is pay in 4 so addictive?
I literally once financed a bottle of body wash.
You know what? I'm going to Afterpay this. It's going to make me feel less guilty to pay it in 4 installments of $81.
I recently watched my friend splurge $2,000 on a designer couch using a buy now, pay later app. It's practically free money, she said, spreading the cost over $400 or $500 payments. 3 months later, her phone was buzzing with collection calls, and her credit score had tanked by 85 points. Her story reflects a booming trend. Global BNPL spending hit $231.51 billion in 2024 and is projected to reach $343.52 billion in 2025. But behind the Pay in 4 button lies a trap. Imagine scrolling an online store, eyeing a sleek jacket or new phone when a Pay in 4 button beckons like a budget loophole. Your finger hovers over it, almost hearing it whisper, "Go ahead, you deserve this." Seems harmless, right? That's exactly what these companies want you to believe. BNPL services pitch themselves as a friendly alternative to credit cards, offering zero-interest installments for must-haves like gaming laptops or concert tickets. Supporters call it a game changer for young people or those strapped for cash, letting you spread payments without credit card interest or payday loan traps. For some, it's a lifeline to avoid dipping into savings. Meanwhile, these same companies tell their investors about aggressive growth targets and profit projections. This reveals the contradiction. If a service is genuinely free, how are these companies worth billions? Their actual business model relies on 3 revenue streams most users never consider. First are late fees, often reaching up to 25% of the purchase price when you miss a payment. For a $200 purchase, that's an instant $50 penalty, substantially higher than most credit card late fees. Second, and most significant, are merchant fees. BNPL companies charge 3 to 6% per transaction, double what credit cards typically require. Merchants accept this premium because users spend more when using these services. The more you spend, the more they win, whether you can afford it or not. Then comes the quiet moneymaker, your data. Every purchase, payment schedule, and click becomes part of a profile, analyzed to target you with more offers or sold to third parties. Your habits aren't just tracked, they're monetized. The numbers tell the story. As of 2021, Afterpay earned $693 million and Klarna $1.4 billion. Figures likely soaring now as BNPL spending hit $231.51 billion in 2024. BNPL companies profit most when you fail. Their business model depends on a percentage of customers falling behind. Credit card companies make money whether you pay on time or not through interest rates and annual fees. BNPL companies charge no interest or fees until you miss a payment, creating a perverse incentive to make the payment process just complicated enough for users to slip up. Even if you never miss a payment, these services are designed to reprogram your financial behavior, slowly turning caution into convenience and discipline into complacency. They sell the illusion of financial freedom while quietly locking the escape hatch behind you. Just $25 a week for that $500 jacket? I can definitely afford that. Sound familiar? That voice in your head isn't just making a casual observation, it's falling for a carefully calculated psychological trick that BNPL companies have perfected. See, when you hand over cash for a purchase or watch your bank account balance drop after swiping your card, you experience something behavioral economists call payment pain. It's that little twinge of discomfort you feel when parting with your money. This pain serves an important purpose. It's your brain's built-in spending governor, a natural brake system that helps prevent financial recklessness. BNPL companies know about this pain point, and they've engineered their entire payment model specifically to short-circuit it. They exploit what psychologists call present bias, our tendency to prioritize immediate rewards over future consequences. When you see that shiny new product, your brain lights up with anticipation. The BNPL option allows you to satisfy that craving instantly while pushing the financial consequences into some distant, theoretical future that your brain simply doesn't value as much as the present moment. This connects directly to another psychological principle called hyperbolic discounting, where we dramatically undervalue future costs compared to present benefits. Think of it like splitting a pizza bill with friends. Paying $5 feels trivial compared to facing a $40 bill alone, even though the pizza costs the same. When a payment is broken into smaller chunks and spread across weeks or months, your brain perceives the total cost as less significant. That $500 jacket transforms into a series of $150 payments, which seems much more manageable. The fragmentation of payments creates a dangerous illusion of affordability. This disconnection between the pleasure of purchase and the pain of payment fundamentally alters your spending calculations. Picture Sarah, a 22-year-old student, scrolling Instagram and spotting a $200 concert ticket for her favorite band. A flashy ad with a Pay in 4 button screams, "Just $50 a month!" Heart racing, she clicks. But months later, those payments collide with rent and another BNPL plan for sneakers, leaving her financially strained. Or consider Jake, a 35-year-old parent who grabs a $300 console via BNPL after a targeted ad lured by $75 a month. When payments overlap with his mortgage, he skips family outings, regretting his impulse. This convenience isn't just a payment option. It's a psychological trap designed to make you forget the true cost until it's too late. By then, the damage is already done. It rewires your spending habits, training you to separate the thrill of buying from the reality of paying. The financial pain gets pushed so far into the future, it becomes invisible until it crashes back into your reality like a wave you didn't see coming. Research reveals that 31% of BNPL users make purchases based primarily on feelings rather than financial planning. Compared to just 5% of credit card users, this emotional approach naturally leads to less disciplined financial behaviors and more impulsive purchases. But what happens when those weekly payments start piling up and you miss one? That's where the real trouble begins. Real stories show BNPL's harsh fallout. My friend's $2,000 designer couch led to a financial nightmare. Collection calls and an 85-point credit score drop in 3 months, pushing her from good credit into a zone where lenders charge steep rates and landlords reject applications. Or take Linda, a 60-year-old retiree who used BNPL for $500 in medical supplies to manage a chronic condition. Late fees of $50 per missed payment strained her fixed income, forcing her to skip meals and doctor visits, turning a necessity into a crushing burden. Miss a BNPL payment, and the trouble starts fast. That friendly Pay in 4 button, it turns into a wrecking ball when you're late. Providers like Afterpay and Klarna freeze your account, block new purchases, and slap on late fees, often $10 to $50 per missed installment. A single missed $25 can snowball into $60 or more with penalties and overdraft charges. Now imagine that happening across multiple platforms. The costs stack fast, overwhelming your finances. These mounting penalties can wreck your chances of securing loans or rentals. Lenders scan your bank statements, and recurring BNPL payments signal unstable debt, even if your credit score remains untouched. And if you think missing one payment is no big deal, think again. BNPL services share information through specialized databases, meaning a late Afterpay payment can flag your account with Klarna too. What starts as a convenience quickly becomes a credit-killing domino effect. The data on delinquency shows a troubling pattern. A 2024 LendingTree survey found 47% of BNPL users had made at least one late payment, with 34% missing payments in the past year alone. The CFPB's 2022 report shows BNPL defaults rose sharply from 2020 to 2021, outpacing traditional credit, significantly higher than traditional credit products. What makes BNPL debt particularly dangerous is its fragmented nature. The average purchase is just $132 according to Experian, but users typically have multiple active payment plans across different platforms. There's no central dashboard showing your total obligations. Your brain treats each $33 weekly payment as insignificant, while losing track of 6 different payments totaling $198 coming out each week. These automatic payments create another trap. When multiple withdrawals hit around the same time, they can drain your account, causing overdrafts or increasing your credit card balance. The CFPB found BNPL users often had delinquencies on their own credit lines and generally had lower credit scores than non-users. While most BNPL services like Afterpay don't report to credit bureaus yet, some, like Klarna, are starting to in certain markets, and lenders still spot BNPL payments in your bank statements, limiting your borrowing power. These regular payments signal existing debt, reducing how much new credit you qualify for, and potentially blocking loans or mortgages, even if your credit score remains untouched. What my friend discovered was that the real price of her designer couch was the constant background stress, the damaged credit that will take years to rebuild, and the financing options that disappeared exactly when she needed them most. This debt juggling steals sleep and focus, worsening financial choices. What starts as $25 a week can turn into a slow suffocation of your credit access that lasts for years. The convenience of buy now, pay later carries hidden costs that reshape your relationship with money. What starts as a simple payment option rewires your spending habits, benefiting companies, not you. BNPL's easy payments train you to overspend, delaying dreams like homeownership or retirement savings. They lure you into purchases you'd skip, but choosing cash over BNPL builds financial freedom, letting you save for what matters most. Before hitting that pay later button, ask yourself if you'd still buy that jacket if it meant borrowing money from a friend. Because that's exactly what you're doing, except this friend doesn't forget, and the payback terms are far less forgiving. To break free from the BNPL cycle, take charge. List all your BNPL debts to see the total burden. Pay off high-fee plans first. Those $10 to $50 hits add up fast. Stop new BNPL purchases to halt overspending. Visit nfcc.org for free counseling to manage debt and create a budget that keeps you in control, paving the way for financial stability. The most powerful financial tool isn't a slick payment app with colorful marketing. It's your clarity about true costs. My friend's still rebuilding her credit after that $2,000 couch. A reminder that BNPL's convenience can cost years of recovery. BNPL promises freedom, but often leaves you stranded. Each missed payment dragging you deeper like quicksand. Real power comes from recognizing the psychological traps designed to keep you spending.